Oh man, we just got like 4 or 5 amazing trades that we caught. Let's break it down. So we get a sweep above 7 o'clock in the morning, right into a inverse fair value gap. So now I didn't catch the trade because you see how once it closed outside the inverse fair value gap, it never came back in, right? So I was just trying to be more secure. So I used this breaker right here. So we have a high, we have a low, higher high, lower low. So as you see here, it finally closed the bottom of it right here. Get the tap back inside, drop lower. Look at this crazy drop all the way down to the daily fair value gap. But let's get deeper into it. This is how I knew it wanted to go lower and lower. So this zone right here is a new weak opening gap. So if I'm expecting it to actually bounce here, I'm expecting this fair value gap right here, this bearish fair value gap, to get used as an inverse, right? And to run away from it, right? Because trades price action that actually comes to the new day or new week price, the new day or new week opening gap, we're expecting it to leave it, right? So once it come into the new day, if I'm bullish, I'm expecting it to bounce, respect it, come up and leave it, right? But if I'm bearish, I'm expecting it to come up, create this down close candle inside of the new day opening gap, and then use a change in the state with a fair value gap. Well, a change in state is a fair value gap. So you see, this is how I knew it wanted to go down because it used this SIBI like it's supposed to use, and it didn't use as an inverse. Drop lower, creating a change in the state. Then it just dumped, dumped, crazy for about, let's see, we got it at a breaker, 189 points. Then once it hits an area where I'm expecting it to bounce at, after we swept out all of these lows that was here, we swept out this low, swept out this liquidity. So we swept out the liquidity into an area where we're expecting it to bounce from, right? Bounce, comes up, creates this zone as an inverse, close above, change in the state, rally. And because you know the market loves to do four things, which is generate liquidity, which is generate and create the highs and the lows. Then it's gonna hunt and take the liquidity. It's gonna take the liquidity out. And then it's gonna rebalance to equilibrium or rebalance to an inefficiency. So if you just chart from here to here, you will see that it rebalanced to the inefficiency. It did both. It rebalanced to equilibrium of this little small range right here, and it rebalanced to an inefficiency, which is these two fair value gaps right here. So this is the play that I did catch, right? I got out right here. Look at the precision. It pulled right back to this inverse. Create a high, create a higher low, higher higher, which is a mitigation. And look what it created. Also, multiple confluences. We have a low right here, high, lower low, higher high, which is our favorite play breaker. Look how it comes into it, taps it to the T, creates a market structure shift right here. Never had a willingness to come back to the fair value gap, so it left it as a breakaway. Runs up right to this new back right up to the new day opening gap, and that brought in about a good 75 points. So that was yesterday, which was Tuesday. Today was so marvelous. Look at this. So this is from 9:30 to 12. So as you see, we already did the Judas swing in the morning, right? At 8 o'clock, 8:30, 8:45, right? We already swept all of the sell side that was here. And we created a SMT divergence with ES and NQ. So I knew that this was the protected low. So look what happens. It taps into the area where I'm expecting it to bounce at. It swept out the lows and it created a SMT, multiple column forces, while we're expecting it to go higher. So I'm expecting this zone to get used as an inverse, get above. You see, there's no bodies. Like, yes, you see it didn't respect it to the T how we like to see it respect, but look at the bodies. The bodies do the damage. The wicks, I'm sorry, the wicks do the damage. The bodies tell the story, right? Eventually we close back up. We close back up, runs away from it. Then we create a bullish breaker, which is a right here, which is low, high, lower low, higher high. And you see how we got the first, so it closed here and never came back and touched it. So you have to wait till it comes back, right? It has to generate the highs to come back and take the highs, right? Remember, the market loves to do those two things, which is generate the liquidity and then go hunt the liquidity. Generate this high, pulls right back to the breaker, touch the top of the breaker, rally above this high. Then we get another breaker, because this is the breaker on the 5 minute. Low high, lower low, higher high, right there. We get a we get a close. We get a close right here. Boom. You see how it came in, touched it, generated this high, came back into the breaker, never going below to the lower quadrant. You see how it's staying above here, and you see how it actually came into this little small little inefficiency. Anyways, rally above, creating a change in the state right here. Oh my gosh, look how it respects it. Look how perfectly it respects it. To the T. Look at that. Bomb, rally. And this one ran for, look at that. Because this was the draw. 156 points. Then you see after that, the market kind of consolidated. Oh, but look, another play, SMT. So let's zoom this in right here so you can see this last play that formed. So we got another SMT with ES and NQ. Right. After the SMT, you're looking for a change in the state of delivery. Let's use these three down close candles right here. 1, 2, 3, 4. Oh, nope. We gotta use this one right here. 1, 2, down close candle right here. Boom. Right there. Come back into it. It definitely dug deep. It definitely dug deep into the order block. But that's why you're supposed to leave your stop where it's supposed to go, because if you put your stop at the low of here, it would have got stopped out. Sometimes it's gonna do some high resistance, which means it's gonna just dig deep. It's gonna dig deep into the candles, right? Bringing fear so you can get out of the trade. But look what happens. It consolidate, but finally it's an ugly consolidation. But just show you stop loss placement. We got the you got this right here. Boop. 30 points. Stop loss right at the low. 15 points. That's a 2R trade. But this is ugly. So when it's so ugly like this, you probably don't want to take this trade, because look how much it did already in the morning. All right, it did so much, all the way down, all the way back up. So that's it right now. That's basically the three trades that we caught the last 2 days. So I'll catch you again on another one.